Hey guys, Matthew here from MJG Realty with eXp, talking today about investment properties. So when we talk about investment properties in Toronto, you're looking at cap rates, right? Capitalization rates, net operating income divided by the cost of the property. Now, properties in Toronto cost a lot more, and the cap rates are a lot lower. So what does that mean? It basically means that you're not paying off the property for a lot longer, and you're not going to be cash flowing. So it's not really a true investment property because you're not going to be cash flowing until much later on, maybe 3 years down the road. You are gaining equity, and Toronto has notoriously been gaining equity in a lot of these places for years and years and years, which is great. But how do you combat that? Well, in Toronto, you're looking at 3.5 to 4% cap rate. How do you make that a little bit higher? You put more capital down. But that's not necessarily advisable because that's a lot of capital. That's a lot of money that you could use in other investment either avenues, stock market or whatever, or other properties, and you could use that to your advantage to make more money. Or combat that by international investing. So what I'd like to talk to you about is Costa Rica in particular, and also in the Bahamas. So in Costa Rica, you can get an 18% cap rate. So investing much lower capital, much lower cost in general, and it can be generating a much higher return for you. So this means that it's going to be a cash flowing property. So even though you put down capital to purchase the property initially, you're immediately going to be seeing returns and making money back. And it's going to pay itself off in about 2 to 3 years. So rather than losing money for 2 to 3 years on an investment in Toronto, you'll be making money and it'll be paid off. And in 2 or 3 years, that's a cash cow for you. You can basically just count on that money just coming in with no other expenses. We were talking about Costa Rica. We're also featuring Bahamas. So the other feature property that we have now, this is a higher net worth property. So it's $6 million, but it's generating $18,000 a week, booked from mid-August until about a week ago. So this is looking at about a 15% cap rate, which is a fantastic return. Anybody can tell you 18,000 US a week in income is pretty good. So yes, you have to lay out $6 million for the property or thereabouts. But again, DM me for the full story because I know something that most don't. So watch out for this segment. We're going to feature some properties, and I'll talk to you next time on Investing with Matthew. Thanks very much.